Guys, my favorite time of the year is here. Tax time. Just kidding. Earnings time. Every 3 months, it's earnings season in the stock market. Guys, earnings season is the best time to catch big opportunities in the stock market. On a short-term basis, stocks move on technicals and news, right? So you can draw your technical analysis lines, your squiggly horizontal lines, and stocks will move 5-10% when they hit. But when you're talking about the big moves, stocks that move 100, 200, 300, or 1,000% over the course of months, they all start with one thing. Some type of news. Most of the time, that's earnings. So earnings comes 4 times a year. A company's got to go out, announce their earnings, whether it's good or bad, and tell the market what they're actually up to. They also give some type of guidance, what they're expecting in the next quarter, but also in the next year. This is the most powerful time to go out and trade. Any stock that you've seen on a big run that lasts for months to even years, like Tesla, they start with an earnings breakout. If you guys remember last year, Tesla had been stuck under a range in that $200 to $300 range for months to the whole year. Every time it got close to 400, it just got smacked down. It was just stuck in a range. Then one day, they announced their earnings. And the earnings were a surprise. And that's why these moves are so powerful. When the street is expecting something, and you announce a big monster surprise that blows everybody out of the water, a stock will start to gap. And what that gap is showing you is that, hey, people are actually liking this news, so they're bidding up the stock. And that gap, and then the subsequent move, if it holds, can take a stock and make a move for potentially days at a time, but then longer term, it can go for weeks to months. Most of the big moves you saw in these huge runners in 2020, 2019, they all started with one thing, earnings. So here is my checklist for how I trade earnings. First thing, and I do this about 8:45 in the morning every single day. I scan for gaps. I scan for gaps that are 3% or more, with minimum 50,000 shares traded in the morning. How do I do that? Well, I use TC2000. They have a gap scanner built right in. You can have my layout for it. I'll include it in the comments. If you don't have TC2000, you need a free tool. You can use Market Chameleon. If you sort on Market Chameleon, you'll see all the stocks that are showing up that have some type of gap. Now the key is you need something clean. You need a stock that's gapping out, but it's breaking out, meaning there's no levels of resistance overhead in a near-term basis. If a stock gaps, but it hits into resistance, it'll do something like this, where it'll gap right into resistance and then fade off. That's not what we want. We want to look for stocks that are clearing a lot of levels. That's going to give it the room to make it go. Okay, so you've got a list of stocks that have gapped up, that have clean charts. Now what? You need an intraday setup to get into them. So I use 3 patterns at the open. ORB, quick pullback buy, and red to green trades. Now red to green is not going to be really applicable in this type of setup because you need a gap for this setup to work. So we're going to look for either the first dip or an ORB. An ORB is a 3-candle pattern, minimum 3 candles. So stock is going to gap up and build out a range for minimum 3 candles. I use 5-minute charts. Anything less than that, you're going to get really choppy results. I know a lot of traders trade on that 1-minute stuff. But when you do that, you're gonna zigzag around and overtrade, and you're really gonna miss the meat on the move, the chunks that are gonna build your account. So I wanna use 5-minute charts. I need minimum 3 candles on a 5-minute chart. When it breaks like it does this, you're gonna buy and put your stop right under the nearest low. That's it. That's gonna get you into the trade. Now it is just an opening range trade. So this is something we hold for an hour or 2, and then come in the afternoon, we re-hit it for a secondary type of setup. A quick pullback buy is essentially the first dip buy. Stock gaps up on earnings, it's breaking out. It's either gonna pull back to either the 9 or 20 EMA like this. You wait for a green candle to hold at one of the support levels, and you're gonna buy and put your stop right under it. And now you're gonna be into this thing for the next runner. If you look at some of these charts, what you're seeing is stocks can move 20, 30, 40, even 50% in a matter of hours to days when you use this type of strategy. So we're technical traders. As day traders, we trade technicals. But when you just draw a squiggly line on a chart, yeah, you may get a few percent. But when you couple earnings with technical analysis, what you're doing is combining the fundamental and the key driving source of stocks, and then you're applying technical analysis to it so that you can get in at the right time with minimal risk. And that is the key to how to trade this. So in summary, what do we gotta do? We scan for the gaps using Market Chameleon or TC2000. We want something clean, and then we wait for an intraday setup to hammer it. We're looking for low risk opportunities that can give us multiple in return. Guys, hopefully that helps. I'm so pumped about this earnings season. I'll be day trading in my chat room, live on video every day, showing you guys exactly what I do. You're more than welcome to join us. And feel free to leave any comments and smash that like button. Take care.